It is almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin. Here are the top stories. Chipmaker TSMC helping boost stocks after raising its full-year revenue target. The yen trading around the 150 mark, with Japanese inflation easing ahead of this month's BOJ meeting. Chinese stocks reverse declines as the PBOC pledges easing and support growth. Factory output and retail sales data beating estimates, but home prices continue their slide. Plus, oil notching its first gain in 5 sessions after Israel says it killed the Hamas leader behind the October 7 attacks. And of course, in the markets, it is about China. PBOC, in its messaging, it is pretty clear. April, it says it will continue to provide monetary support.
Yeah, it's really interesting how comments from the PBOC governor managed to, in a way, turn things around as far as market sentiment in China is concerned, because traders were initially reacting a bit negatively to the data that we got. I'll rake through some of that in a bit, but we have, as you just mentioned a short while ago, the PBOC just vowing monetary support, the governor suggesting that we could still see triple R cuts by the end of the year, and also a re-lending mechanism that's been set up to buy back shares. So that helped to turn things around as far as some of these Chinese and Hong Kong stocks are concerned. But apart from that, we're also keeping an eye on the chip stocks. Of course, Taiwan today managing that outperformance because of TSMC earnings, as well as that revenue outlook raise from the chip-making giant. We have, of course, the Japanese currency moving off some of the lows from this session after getting verbal intervention, keeping an eye on oil prices as well amid tensions in the Middle East. Let's flip the board right through that China data once again, as we got the GDP print for the third quarter. That was better than expected, but it still represents a slowing, putting the full-year growth target further out of reach. And then if you think about the September activity indicators, they were better than expected. But this was also a time when we saw the PBOC come through with that stimulus blitz. So overall, activity indicators reflected that good mood. So keep that in mind. Maybe October numbers might paint a more accurate picture, because that shows you that stimulus disappointment that came through as well. Haas.
Also, bear in mind, the target is 5%. Will it get there? Ailsa Hong, thank you. Our next guest thinks stabilization is still a higher policy priority for China than reflation. Let's bring in Pei Qian Liu, Asia economist at Fidelity International, and Bloomberg's very own Winnie Xu. Pei Qian, let's start with you. That messaging from China officials becoming pretty clear. They are willing to do whatever it takes. And today, the PBOC is saying that monetary stimulus is coming.
Thank you for having me, Has. Yes, as you mentioned, a lot more policy communication are coming from China with the goal of having more concerted and coordinated effort to stabilize the growth. And we have already seen some of the policy indeed. Rate cuts, triple R cuts delivered at one go was very helpful to boost the sentiment. And today's GDP data was also showing data activities growth slowing sequentially, which does require a lot more support.
And Winnie, we are seeing that the messaging from the PBOC actually having an impact on the markets.
Right, it's definitely lifting market sentiment right now. People are saying that this means new liquidity into the market. And while the numbers of support was mentioned on September the 24th already, it's going to be effective as of today. So that's helping the market today overall. But it still depends on how willing and how much these financial institutions can get from the PBOC. And while we saw that mixed data today, the GDP numbers, like you mentioned, it was better than expected, but still falls below that 5% target, which means that more stimulus are expected to come.
And speaking of which, the PBOC says that it's setting up a re-lending for share buybacks. In terms of headlines, they keep coming. PBOC aiming to curb government bond yields, one-way drop risks. Of course, how are you assessing all the messaging that we're hearing right now, Pei Qian?
Right. So the PBOC is very clear. They are not going to allow the market to react to the messaging from the PBOC. They are going to continue to support the growth. And we have already seen some of the policy indeed. Rate cuts, triple R cuts delivered at one go was very helpful to boost the sentiment. And today's GDP data was also showing data activities growth slowing sequentially, which does require a lot more support.
And speaking of which, the PBOC says that it's setting up a re-lending for share buybacks.
Well, I think it all dials back to the Politburo pivot that we have heard. And the whole policy goal and priority we would say is to stabilize the market momentum as well as the sentiment. So in terms of more specifically what the PBOC has been delivering, I think the PBOC focuses on two aspects right now. Firstly is to cut the cost of financing for the real economy so that it could help the corporates and the household to start leveraging again. And the second aspect of that is definitely to deliver more liquidity support within the economy, both towards the capital markets as well as to the real economy.
And for the market, Winnie, I mean, what will it take for that, turnaround, a proper turnaround for China stocks, for instance?
Right. So it seems like right now the sentiment, as we saw over the past couple of days, it's been slightly bearish, and we see a lot of volatility, mainly driven by the retail investors pulling money out of their investment funds and putting that back into their savings account because they have been hurt joining the rally at the wrong timing, and the lack of policy support and the clarity around the policies have really weighed on the market for the past couple of days. However, the investors who are looking at the longer term, they're citing that earnings estimate is one of the key catalysts that they'll be watching. As we saw some signs of turnaround and some signs of bottoming of that earnings estimate, people are saying that whether we're going to see a U curve or a V curve of return, that's going to hinge on how much the policies that we're going to see at what scale, at what pace, and to whom. So these would be some of the catalysts that we'll be watching as we head into some of the key events, including the MPC and the Politburo meetings.
Pei Chen, you talked about how priority right now is stabilization. When might reflation be a priority for China?
Well, I think we have to take that into a longer-term horizon into perspective, given that China has now been on the transition from what the old property urbanization-driven growth into a new growth model which relies more on tech, innovation, manufacturing, and consumption. So we are still in the transition phase where we face some headwinds and downward pressures. Given that we do see a lot more coordinated effort that's being rolled out by the policymaker, that doesn't mean they are giving up on the transition phase. During the transition phase, we still think stabilization is of a higher priority because the new growth engines does need some time to nurture before they show up to become a more reflationary driver. So going forward, I think it's safe to say that in the stabilization environment, we're still going to see a gradual pickup in growth momentum, and that the new reflationary force will come when the new growth engine matures.
Can we get stabilization when the property sector is still in the doldrums?
Well, it's a structural challenge that the economy faces. We all know that. But I think with the Politburo pivot showing greater determination to stop the decline of the property, we think more concerted effort will likely to put out on this front. So from the policy signal we have seen so far, I think they are going to address the issue from both supply and demand side. From the supply side, I think more efforts will be made to reduce the excessive inventory and reduce supply overall. And from the demand side, more restrictive measures will be relaxed over the long run to stimulate household demand, and that we're hopeful to see a new balance being restored at fairly low levels for the property sector.
Winnie, let's bring you back into the conversation. We talk about how this is a confidence issue. And when you take a look at China ETFs in the US, for instance, they're the biggest destroyer of wealth. It must be challenging to reverse that confidence issue when it comes to foreign funds.
Right. So historically speaking, you can still see that foreign investors have been really hurt in terms of their investment into Chinese equities. And right now they're looking really for that catalyst and for that reason to believe that this time it's really different for Chinese stocks. And hence we're hearing so many domestic investors and even foreign retail investors joining this rally. But for now, it seems like it's still more of a trade-driven instead of a very like a conviction-driven trade at the moment, because we're seeing people pulling their money out, profit-taking after a strong rally. That partly means that they don't really see the rally to sustain, because right now we don't see much turnaround in terms of fundamentals yet. You mentioned the property trouble that's still there. The consumer confidence is still yet to recover, and also the part that the investors are focusing on really is that headline number. If we going to get that trillions of yuan of fiscal support, and that is still yet to be announced. So until we see more of those announcements and those recovery, foreign investors are likely to still take that wait and see mode until we see more details on that.
So it is about timing China's rebound and how that stimulus might play through into the markets. That is the issue, Winnie.
Yes, exactly. But the difficult part is that it's very hard to tell that timing and that scale of stimulus at this point. And people have been trying to estimate that. And when they get the timing wrong, that disappointment leads into people selling off at this big market rally. But some more optimistic investors are saying that this is going to be a longer term trade, including Goldman Sachs saying that we are going to wait for more retail investors to pour more money back in. And right now we're seeing lots of volatility, but some of the investors with the short-term money pulling money out of this trade is actually helpful if we want to have a more sustainable market. So it is actually a clearing event to take money off after Chinese stocks at this very overbought level. So while we saw the stock market down over the past 2 weeks, it's actually still up about 20% since September. So that overall optimistic view within the China stocks is still there, but it still just takes more for people to be more confident that the market rally is here to stay.
And Pei Chan, before we let you go, when might the stimulus package flow into the economy? Some say not till perhaps 2025.
Well, I think in terms for the stimulus to take impact, some of those marginal easings have already started. So there were accelerations of local government bond issuances, as well as acceleration of the implementation of trade-in programs, as well as equipment upgrading. So all these are going to fit into real activities, are going to stabilize the growth sequentially as early as Q4 this year. But in terms of their more concerted effort to address the structural issues such as local government debt and property, I think those policies may take longer time to roll out. They might very likely roll it out in a very gradual manner, but we do see a lot more determination from the policymakers to resolve these issues.
I'm standing before you today to inform you that Hamas leader Yahya Sinwar has been eliminated. The person who committed the most terrible massacre in the history of our nation since the Holocaust, the mass murderer who murdered thousands of Israelis and kidnapped hundreds of our citizens, was eliminated today by our heroic soldiers. And today, as we promised to do, we settled the account with him. Today, evil has suffered a heavy blow, but the task before us is not yet complete.
After a long and determined pursuit that lasted an entire year, our forces eliminated Yahya Sinwar, the main person responsible for the heinous massacre of October 7th and the death and kidnapping of many Israelis. We said we would get to him, and we did get to him. The world is now better off without him.
Israel's Prime Minister and Military Chief of Staff talking about the killing in Gaza of Hamas leader Yahya Sinwar. The U.S. sees Sinwar's death as a pathway to end the war in Gaza. President Biden says now is the time to move on, move toward a ceasefire and bring the hostages home. For more, let's bring in Bloomberg Horizon's Middle East and Africa anchor Jumana Basachi in Dubai. Jumana, this is another coup for Netanyahu. I mean, Sinwar's killing is significant.
Absolutely significant. Another milestone for the region, with Israeli forces that they said that they had killed and succeeded at killing Yahya Sinwar on Wednesday this week. He hadn't been heard of in weeks in the run-up to this, but it also appears to be somewhat of a chance encounter. Reportedly, Israeli tanks were on a routine patrol towards the southern part of Gaza. They spotted some suspicious movements in a residential building and then subsequently fired at that building without realizing that the source of the suspicious movement was actually Yahya Sinwar. They only later confirmed about 24 hours later that it was indeed him. And of course, he not only was the political leader of Hamas and has been so since the killing of Ismail Haniyeh, but he's a figure who has loomed large over the party, over the group in the last couple of decades. He is thought to be the mastermind of October 7. And to the point of what Netanyahu was just saying now, it has long been a mission of the Israeli government to exact revenge on October 7 by carrying out the assassination of Yahya Sinwar. Now, this wasn't a targeted assassination, but what it was in the end was some form of retribution that the defense minister had promised to enact since the October 7 terror attacks took place. Now, what happens from here obviously is up for big debate. He played a huge role insofar as putting together the strategy for Hamas, but Netanyahu is saying that the mission before us is yet to be completed, which signals that even though some people are calling this the potential for a new day for Gaza, as far as the Israeli governments have signaled so far, the mission yet is not over.
Talk to us about U.S. response. We know Biden is keen for a ceasefire, for the end of the conflict. The question really is how much pressure the U.S. can put on Netanyahu.
That's right. So we had commentary pretty much soon afterwards from President Biden. He was speaking around the same time as the Israeli Prime Minister, saying there is now the opportunity for a day after in Gaza without Hamas in power. We also heard from Vice President Kamala Harris, of course, the presidential candidate, saying that the killing of Yahya Sinwar gives us an opportunity to finally end the war in Gaza, and it must end such that Israel is secure. Biden also said that Anthony Blinken will be traveling to the region once more in the next 4 to 5 days to continue with those ceasefire discussions. Blinken reportedly had a call as well with the Israeli president overnight, congratulating the president on the mission that killed Yahya Sinwar, but then also emphasizing the U.S.'s commitment to Israel's security, and then subsequently that it is imperative to lead to an agreement that would secure the release of hostages. So the U.S. are still applying a lot of diplomatic pressure here, but as we know, Haslinda, these talks have been stalling for the last few months.
Realistically, Jumana, what are the chances of a ceasefire at a time when the world is still awaiting for Israel's response to Iran's?
I think that is the big question. Perhaps this does open up a window of opportunity, but there are critics out there who are saying that the Israeli Prime Minister has not wanted to get a ceasefire across the line, mainly to protect himself politically. He is under pressure from some more ultra-nationalist part of the Israeli government who would not like to see Israel secure or come to an agreement with Hamas in any political form. So there's always that obstacle. And then on the other side, you have to think about who is going to be representing Hamas in these talks anyway, now that another key political figure has been taken out. So still a lot of questions.
Jumana, thank you so much for that. Bloomberg Horizon's Middle East and Africa anchor Jumana Basachi in Dubai. Plenty more ahead. Keep it here with us. This is Bloomberg. TSMC reversing that sentiment in the AI space, in the tech space. Take a look where we are in terms of how it's performing. Currently up by 5.5%. Of course, TSMC earnings topping quarterly estimates. But what's really more important is that TSMC raised its guidance, its 2024 revenue target growth. There you have it. That stock lifting the rest of the chip stocks as well. And overnight, we saw a spectacular movement in TSMC as well. Let's stay with the company. Turn to reports that the U.S. is investigating the company's dealings with Chinese tech giant Huawei. This according to the information. For more, let's bring in Annabelle Drewlers in Sydney. And Belle, if true, this would be a breach of U.S. export rules.
Yeah, it certainly would be quite problematic, really, if confirmed. But this is the report, as you said, coming through from the information. And what it's saying, according to sources, is that the U.S. Customs Department, or Commerce Department, rather, is investigating whether TSMC made AI or otherwise smartphone chips for the Chinese tech giant Huawei. And as you say, that would be a breach of the U.S. rules or sanctions that are in place. Their sources say that one possibility is that the department is looking into whether Huawei bought chips from TSMC indirectly using intermediary companies with a different name. So then it's that real question, okay, what's the sort of due diligence that TSMC is doing on its customers? It does sort of also feed into a story that Bloomberg had earlier this week, that US lawmakers are putting pressure in Washington toward the Biden administration to stop Huawei suppliers from using American semiconductor manufacturing or semiconductor making gear. And it's really that question as well, how Huawei is able to build sort of a clandestine or secret chip plant network and circumvent these restrictions. So certainly that focus on US-China tech rivalry not disappearing anytime soon, and now possibly TSMC also caught up in that.
And Bill, we talked about TSMC's earnings. What were the highlights?
Well, as you said, yes, they lifted the guidance yet again this year for the fourth quarter. So that was strong, and it also just points possibly to further growth. I mean, the CEO was saying, for instance, we're going to see 5 years of strong growth for the company. Aside from the guidance, there was also the margins, and we did get guidance on that actually lifted for the fourth quarter. Third quarter came in quite a lot stronger than what economists or analysts had been expecting here. So at 58%, the guidance had been for around 54.8%. And so it tells you that TSMC is able to make more money out of its more expensive products, and that points to the demand for AI overall, AI chips. And we also heard commentary on that saying that it's strong. Really, we're in the early innings here. So echoing the kind of comments we've already heard from other tech executives in Taiwan, but also from NVIDIA CEO Jensen Huang.
Belle, thank you so much for that. Bloomberg's tech reporter Annabelle Drewlers. And of course, today, front and center, it is about China. We heard from the PBOC promising further monetary support. He talked about how that RRR may further be lowered by year-end, may also start re-lending for share buyback. That's providing a boost for the stock market in terms of the Hong Kong China 8 shares, currently up by more than 1%. Quite a turnaround there. Coming up, GE Healthcare will discuss their exposure in China and how it's being impacted by the country's choppy recovery. Keep it here with us. This is Bloomberg. Well, China firmly in the money as it heads to lunch. It has to do with PBOC. Also, that data out of China, which is pretty encouraging. Let's do a check-in with Ailsa Hong. Ailsa, what's the latest?
Yeah, we are seeing a bit of a positive day on these Chinese stocks. But let's talk about the Japanese yen first, because it is in focus after U.S. data came out overnight, and we saw how it was solid on retail sales, on the jobless claims that led to higher U.S. yields. And the dollar was firmer. So dollar yen, we saw it pop above 150, and then yen weakened further after Japan's CPI print fell for the first time since April. This is mostly due to government subsidies and is unlikely to, steer the path of the BOJ. But again, a cause of concern for some. And against that backdrop, we got verbal intervention from the FX chief, warning of some of these steep declines or sharp moves, I should say. So that helped to bring dollar yen back down below the 150 level. Let's take a closer look at how that's playing out in Japanese equities. A bit of a support. They're coming back from the lunch break, looking quite firm. Also helped along by what we saw from TSMC, lifting more or less some of these chip names in Japan as well. Now we have 7&I in focus as well, after Couche-Tard says it wants all of the Japanese retailer in its takeover advances, and it's just ramping up its courtship. And this tells you how serious the Canadian firm is of that takeover move potentially. It's also, this whole saga, been a key test of how serious corporate Japan is of change. Now, Couche-Tard seems pretty confident that it's going to be able to address antitrust regulatory concerns. Meanwhile, 7&I, on its part, has been trying to fend off the advances from Couche-Tard. And this is, how it's overhauled its operations as well. We have Couche-Tard also saying that its top management recently on a trip to Japan was unable to meet 7&I. So that's what we're seeing in the corporate front in Japan. But as you say, that focus is on China as well. So let's take a look at how we are going into the lunch break on the mainland, with gains of 0.8% on the CSI 300. The PBOC vowing monetary policy support, perhaps more importantly, setting up that relending mechanism to enable these share buybacks, although we have the likes of SocGen already reacting to this, saying that the real impact might be limited. Against that backdrop, we also saw Chinese government bonds pairing gains from earlier in the session, Has.
And it is about stabilization, it is not about reflation, and we might just see the impact of that stimulus later in 2025. Ailsa Hong, thank you. Medical tech companies are among those feeling the impact of the stumbles in China's economy, but US-based GE Healthcare believes this is a temporary challenge and views China as an attractive long-term opportunity. Joining us exclusively is Elli Sho, President and CEO International of GE Healthcare. Good to have you with us.
Thank you for having me.
Thank you for coming to our studio. We talked about China. I know that it is not under your purview. It is an important market, 15% of your revenue. Talk to us about the potential impact of the stimulus we've had so far from China.
China continues to be a very attractive market for healthcare and other industries. When you think of China today, 1.4 billion people, they still need a lot of healthcare to increase access, improve outcome, having much better efficiencies. And it's aging population now. As we look at China today, it's stumbling with some of the economy maybe coming down this year, but it's only a stumble in the way before coming back and recovering on the longer term.
The thing is, the sector has been impacted by China's anti-graft campaign. Are you seeing improvement in terms of orders in China? Are you encouraged by what you're seeing on the ground?
We expect to see a decline, a severe decline this year in China. We've seen in first half 13% decline in the Chinese market for healthcare, but we see recovery already starting. Will it continue to recover in Q4? Will it continue to recover in Q1? We don't know yet. It's too early. But when you look at the midterm today, we're quite encouraged because healthcare is still a burden for China and for also Asia in general.
The thing is, Chinese healthcare players are also coming to the fore, and they're getting better at producing more complex services. I'm just wondering how you're assessing the competition you're seeing in the market.
Competition is always healthy. It gets us better every day. I think where we are...
It also eats into your market share.
Absolutely. But the market is growing overall. We're not getting less on this planet. And I think the way we're looking at things in GE Healthcare is basically playing the AI game, the digital game, looking at care pathways and connecting devices together for the better outcome for the patient.
You talked about playing the AI game. What does that mean? How does that look like?
If you look at the last 20 years in healthcare, we produce much more data for doctors. And then if you have more data, you have more signal, but you have more noise at the same time. If we don't have empowered decision by playing the data analytics and machine learning, doctors would be drowning under data. So the way we look at it is how do we get machines much more efficient, much more intelligent, then doctors can have better diagnosis and better treatment.
Elli, it's great having massive amount of data. The thing is, what does it mean for the patients? What does it mean for cost that they have to pay eventually?
Absolutely. You're hitting the head on the nail on the head. If you look at today, much more data, that means much more cost at the same time. Unless you use the data in a way that you have much more precision healthcare, you're not having any outcome clinically speaking. So by using AI, we're going to be able to help doctors to make the right decision and basically treat much more efficiently. So on the longer term, patients have much better experience, and all healthcare systems in the world will be much able to deliver outcome for the patient and reduce cost eventually.
We know that China is an important market for you. Elsewhere in Asia, how does it look like, and what's your growth strategy there?
I think Asia is the best place to be these days.
Versus the US. And Europe?
Europe has been increasing healthcare spend and modernization in the last 2-3 years. So I think now it's correcting a bit more, but that's still, Europe is still growing overall. China is having some, difficulties these days. But if you look at Southeast Asia, including Korea and Australia, it's growing. The GDP is growing. They need more healthcare. If you look what's happening in Indonesia, what's happening in Vietnam, they're investing in healthcare, and I think this is only the beginning.
How is an aging population factoring into all of that? Because we know that for countries like China, for countries like Singapore, we have an aging population issue.
Aging population is basically where you need even more healthcare, and eventually the way we're working is basically how do we prevent late unhealthy age, basically. And at the same time, we need to treat the healthy population early enough so that it doesn't become unhealthy, and also treat the aging population. I think this has given us much more tailwind and much more also purpose to work on improving healthcare overall.
We've been talking about the uncertainty in the world today with the escalating tensions in the Middle East. How is it impacting supply chains for you? And is there more diversification now than before?
Absolutely. I think what COVID taught us in the last 5 years, basically how to become a bit more diversified geographically when it comes to supply chain overall. And I think today we have almost 20 countries where we have different R&Ds, different logistics, different supply chain and factories. And so is it 100% fluid? Maybe not. But we are basically set in a way to be able to go around it.
But isn't it true that nearshoring, friendshoring all adds to cost eventually?
Yes. But it all comes to linearity and making sure that we plan and advance the way we're going to move things around.
And for you, what is the biggest risk out there?
I think the biggest risk is basically for civilians and patients in these countries to have access to healthcare. And so as we look at healthcare as a business, we also have a purpose where we would like to create a world where healthcare has no limits. And so I think we want to make sure that we continue to help to bring healthcare to these patients.
In my conversations with some of those in the healthcare sector, they talk about how the lack of infrastructure in some countries in particular, the lack of investment in these infrastructure is a huge issue. Is that on the radar of governments now?
It depends. Every country is different. Every country is at a different level of maturity in these infrastructure. But I'm really encouraged when I look at what's happening in Indonesia. I was sitting with some government officials in Indonesia looking at what's happening in the oncology sector, what's happening in the digital space, and how they're looking at preventing cancer for the future, how they're looking at making sure we have universal health coverage. I'm extremely encouraged. So I think there's a real will and investment going in this path. Vietnam is the same. Singapore has been also on the forefront of how to innovate and making sure the patient is at the center of healthcare initiatives.
As the sector relies more and more on data, are you looking more and more into the ethical use of that data? And how do you ensure that this is done throughout the world?
We look at generative AI and foundation models to make sure that we're not adding waste in when you look at data. We're making sure that the data is speaking and is becoming much more, I would say, predictive to the state of the patient. So I think data today, 97% of it is not used in healthcare. So how do you make sure that we use more data in an efficient manner? And so looking at cybersecurity, looking also at how we store the data, all these are becoming more and more growing, I would say, areas of interest in the healthcare industry.
And as AI accelerates, Elli, thank you so much for that. Elli Sho, President and CEO International of GE Healthcare. Now, DBS Group CEO says only about half the banking industry has made sufficient progress in technology transformation, which is crucial in allowing further transitions to AI. I spoke exclusively with Piyush Gupta at the inaugural Bloomberg APEC Sell-Side Forum here in the Lion City.
People have anecdotal examples about how AI is helping this, that. I'm in and about measurement. 3 years ago, I told the folks, all of these stories are good, but I need you to start demonstrating through A/B testing, control group, sample group, how much lift we get from use of AI. And, our 1,500 models cover 400 use cases. But this year, we can measure about $800 million of value creation. next year over $1 billion in our numbers. I think there are very few companies which have got to the level of being able to measure that value creation from AI. And then there is, the future. I think the big thing which people are underestimating right now is the power of tokenization, because crypto became a bad word for the last 2-3 years. I think attention spun away from that. I'm still of the view that DeFi, distributed ledger, and tokenization is going to be as much and as profound a game changer as AI itself. And we marry the two, the consequences are huge. We have a lot of work we're doing even in that space, but I can't think of too many companies in the world which have really thought about how do you think about this new technology. So depends on which part of the transformation you look at. I'd say the answer is different in terms of how much progress people have made.
I just want to pick up on what you said about how 50% of companies, banks, are not doing it right. What is doing it right, and what are they struggling with? Why the struggle?
Because you really need to make big bets in terms of switching your core architecture. A lot of banks and companies have been burnt in the past with DBS ourselves. We tried to do a core banking transformation in the mid-2003 to 2005, and we wrote off $400 million, couldn't get it done. And there are enough stories. The graveyard is littered with companies which tried it, and it didn't work, and so they gave up. The reality is that it's a lot easier to do that now as long as you have clarity of how you achieve it, because the world has changed and technology has changed. Nevertheless, you have to make big leaps of faith that the payoffs will come, and you've got to change because it takes money. So a lot of people start doing IRR calculations very early, and then it's hard to demonstrate whether the IRR will be worth it. So you've got to bet on it, saying this will pay off. It does pay off, but a lot of companies get stuck with that. The second thing is you've got to really give the tech people a real seat at the table. So this is not just about technology, it's about a culture change. I sometimes, I hate the words front office, back office, but tradition has been there's some people in the front office and the techies in the back office. When we started our journey, we looked at Google's org chart. Most companies have one CIO and lots of sales and marketing and business heads. Google has 10 CIOs and one sales and marketing head. But every CIO is a business manager. So you've got to give techies a seat at the table. They're co-drivers of the bus. They're not the back of the bus. Now, that takes a mindset shift and changing the role of tech. We came up with something called two in a box. Every one of our business journeys are co-led by the tech person and the business person. So you've got to commit to tech. You've got to change and elevate the role of technology. You've got to make sure that everybody partners in the transformation. And then you've got to be consistent with it over a period of time.
And that was DBS Group CEO Piyush Gupta. Still to come, the latest on Hyundai's record IPO of its Indian unit as the bidding period comes to a close. This is Bloomberg. Just moments away from the open in India, of course, Indian markets have been down for 4 consecutive days. Tech plays like the likes of Infosys have been under pressure. It is about that earnings story. Earnings have disappointed and projections have also disappointed. Taking a look where we are in terms of the first few minutes of trade, we have the Sensex in negative territory, down 0.3%. Losses too for the Nifty Bank Index, currently tilting towards the negative as well. And staying with India, Hyundai's record India IPO has been oversubscribed more than 2 times, with strong institutional demand making up for tepid retail interest. For more on this, let's bring in Asia Equities reporter Chiranjeevi Chakraborty. CJ, put this in perspective for us. What does the weak demand from retail investors really tell us about this listing?
Well, the first thing it tells us is that investors are not really expecting a massive listing pop when the shares do list next week. Remember, India's IPO market has been all about banking on those listing pops. We have seen average listing gains in the region of 30 to 40% for IPOs this year. But it seems when it comes to Hyundai's India unit, investors are not banking on such a listing pop, and that is why I think we have seen the subdued interest from retail investors. The shares allocated for retail investors were subscribed only about 50%, while those for high net worth individuals were also subscribed only around in the region of around 60%. Most of the subscription or demand for Hyundai India's shares actually came from qualified institutional buyers, which are your domestic institutional investors as well as foreign portfolio investors. So clearly, investors at this point of time not very convinced that the stock will get a listing pop when it lists next week.
Well, the thing is, we've seen a surge in IPOs in India. Any broader concerns about the Indian IPO space from these figures?
I don't think so. I think this would probably be a little one-off. I don't think it'll be fair to extrapolate what the sort of subdued demand we have seen from retail investors and HNIs or high net worth individuals for Hyundai. We have seen over the past 9 months that generally IPOs have seen a very strong demand. The liquidity in the economy as well as in the market remains quite strong, especially for domestic institutions. And if you look at some of the indications for listing gains for the upcoming IPOs, for example, Vari Energies, which is going to open in the coming days. There we are anticipating almost 100% sort of listing pop. So clearly demand is still very strong. It just seems that given the size of Hyundai as well as certain concerns around the fundamentals of the automobile sector in India, recently we have seen some weakening demand as well as concerns over festive demand as well and poor earnings from some of Hyundai India's peers. I think that probably might have played a role in the subdued demand, but I don't think it'll be fair to extrapolate that to a broader concern for the IPO market as far as India is concerned going ahead.
CJ, thank you. Asia Actors reporter CJ Chakraborty. And later today, RBI Governor Shaktikanta Das joins us at the inaugural Bloomberg India Credit Forum. Subscribers can watch that exclusive interview streaming live on Bloomberg.com as well as live go on the terminal at the times you see on your screen. Plenty more ahead. Keep it here with us. This is Bloomberg. Big Nomura clients are halting their trades with the firm over the manipulation case. Of course, this on the back of the reports that we have talked about, that the big Nomura clients are halting trades with the firm over manipulation case. We'll bring you the details as they come along. As of now, that is the line that is coming through. In the meantime, here are some of the stories we are following. U.S. prosecutors have accused an Indian government employee of directing a foil plot to assassinate a Sikh separatist with American citizenship in New York, mirroring a killing in Canada. Vikas Yadav was added to the criminal case against Nikhil Gupta, who was charged last year with working with a government agent to kill an attorney. Yadav wasn't named as that official in the original charges, but was identified in the latest incident. Of course, just to bring you those details that we have earlier on to that headline we're giving about how big Nomura clients are halting trades with the firm of the manipulation case. Some of Japan's largest financial institutions have halted that trading securities with Nomura as the fallout from its market manipulation scandal spreads. And that is according to people familiar with the matter. We're seeing Nomura stocks are in negative territory, extending that decline to 0.6% as we speak. Now, Prabowo Subianto will be sworn in this weekend as Indonesia's next president. The former defense minister says he's aiming for policy continuity as he replaces the popular Joko Widodo. President Prabowo takes office with an ambitious program, including a target of 8% growth in the economy. Indonesia Maju, or Developing Indonesia, is the key strategy. And harnessing the country's natural resources lies at its heart, especially nickel. Vital to the production of EV batteries, Indonesia increasingly wants to control not just the mining of nickel, but its refining too.
I think this is kind of a leadership that we'll see under Prabowo, someone who understands the international political landscape, who understands how resources are mobilized so that he can gain advantage from that.
Still, managing Indonesia's natural resources could be a potential flashpoint for foreign relations. Prabowo has been critical of the EU's new deforestation law, blaming the destruction of forests for palm oil production on the legacy of colonization. Indonesia has a track record of looking out for its own interests in international relations, a policy of non-alignment Prabowo will undoubtedly retain. And a significant strategic decision in a region that is on edge over China's muscular foreign policy.
Over the next 5 years, what I can imagine is a more active president in terms of foreign policy activity. We'll see Prabowo involved more in making foreign policy decisions.
Factor in a promised big increase in defense spending, up to 1.5% of GDP by 2029, effectively doubling current expenditure. The Indonesian Military Academy graduate arguing prosperity is closely linked to security. But the strongman reputation has a darker side. Lingering concerns about Prabowo's military record and controversy over alleged human rights violations during the Suharto years have raised fears about Indonesia's political future. No surprise is the image of a jovial, dancing grandpa he now prefers to portray. Prabowo's inauguration happening over the weekend. And before we go, we'd like to invite you to join us on Monday for the debut of a new show, Insight with Haslinda Amin. It focuses on in-depth interviews with top global executives, newsmakers, and innovators. We have a big lineup of big-name guests, including Carson Block of Muddy Waters. Of course, he is the famous short seller who's moved markets, has taken on companies like Luckin Group, Anta, Noble. We'll get his views on China, on Asia, and why a short seller like him is going long on Vietnam. We'll also have the likes of those big in the emerging energy market space amid the conflict in the Middle East. Insights from the boss at the IEA on the fragilities in the global energy space, how demand looks like with a supply overhang. There you have it on your screen. Those big name guests you do not want to miss. That debut. That is it from the final edition of Bloomberg Markets Asia. Horizons, Middle East and Africa is next. Keep it here with us. This is Bloomberg.